Here I'm showing you a multi-step income statement. I'm not going to spend as much time on the sections that you already are familiar with, but I will still cover those generally. As we know from past experience, the first section of our income statement is always where we report our revenue. So our sales, less any returns and allowances that we have, minus any discounts, gives us our total revenue. Then we always report our cost of goods sold, which is our beginning inventory plus purchases minus ending inventory equals our cost of goods sold, which in this case is $27,000, and then our gross profit is our total revenues minus our cost of goods sold. Then we get into our other miscellaneous expenses like operating expenses, things like selling and general and administrative expenses. The next section then is what I call our other items. Now these show things like interest and gains and losses from peripheral transactions. Now what this means is these are things that we're not in the day-to-day business of doing. We're not in the business of making interest or selling investments. We're in the business of making X product or Y product, whatever that is, and selling it. So this is still revenue, these are still gains and expenses, but it's not what we're in the business of doing, so we put it down here in this other section. This top section is really what I would say is probably the most important section of our whole income statement, because this is what we're in the business of doing. So this ultimately gives us our income from continuing operations of $130,000. We then calculate the tax on this. So our income from continuing operations is $91,000. Every single item that's going to show after this, now because we showed our taxes here, has to be shown net of any income taxes. On most beginning level accounting courses, this is where we stop. And this would be our net income. The additional items that we're going to focus on in this class that are a little more complicated are things like discontinued operations. This would be if we shut down one of our stores in a certain city, or if we stop selling a major one of our product lines. Okay, so we're going to have to report two things. Discontinued operations are going to show the income or loss from operating a now discontinued segment, along with the gain or loss from disposing of that segment, whether it's a store, whether it's the equipment in that store, all those different items. So here we have income from operating it of $3,500 and a loss on the disposal of that segment of $4,200. And we'll report both of those after tax. So in this case, if we would have had $5,000 of income, if we take tax out of that, that nets down to $3,500. If we would have had a $6,000 loss here, that would actually save us tax dollars at the same percentage rate, which would be an $1,800 tax savings. The other item I want to show you down here in this section is what's called extraordinary loss. You guys can read about that in your text, but generally this is something that's both unusual and infrequent. So in this case, we had a loss of $2,000, netting a tax savings of $600, so for a total loss of $1,400. So we would show these extra items on here. We break these out separately because when investors and creditors look at these, they know that these are probably not going to happen on a year-to-year basis for the most part. And then we end up with our net income at the bottom. Then we also have earnings per share. To calculate earnings per share numbers, which I have detailed out here in this box, you take the income from each of these sections from the income statement up above, and you divide it by how many outstanding shares you have.